GameStop, AMC, these meme stocks that were so hot a few years ago got really hot again this week, and it spread to a wide range of stocks that really had some big moves. The question is, how do you trade them? Well, there's some important principles that I'm going to show you in this week's video. Plus, I'll do my analysis of the markets, figure out where stocks, commodities, and currencies are likely going, and then we'll look at the trade of the week on CRKN. Well, if you remember a few years ago, GameStop had this massive run. It was made into a movie called Dumb Money, which I recommend watching. And then you had other stocks that were heavily shorted, really poor companies that also made big gains. Stocks like AMC and BlackBerry and Tupperware. And then they really kind of went dead. But in the last week or so, they came alive again. And one of the reasons is the character Roaring Kitty, who was a contributor to the Wall Street Bets forum on Reddit, came back to the forum, came back to trading. And that just ignited the optimism among retail investors for these low-priced, let's be frank, garbage stocks. They call them meme stocks, and they can make big gains, not because they have good fundamentals, but because they have a large crowd of emotional traders chasing them. And it's nothing wrong with trading them as long as you don't buy into the story and believe. You simply have to follow the chart. So there's some important principles that I'd like to share with you for how to trade these stocks. And not necessarily just GameStop and AMC, but any so-called meme stock, low priced, typically a low number of shares outstanding, very liquid, very volatile. They can make massive gains. We had stocks this week that in a single day went up over 500%, but you have to know how to take advantage of them. So let's take a look at some of the core principles. Number one, focus on abnormal activity. In order to find those meme stocks, those really abnormal movers, focus on stocks trading with abnormal volume and very strong liquidity, making price gains. Number two, look for up breaks from low volatility. Now, what I mean by this is stocks that are sort of quietly going sideways in low volatility and then come alive with abnormal activity. That's your initial cue to get in. Now, once they start moving up, then don't chase them higher, but buy pullbacks and breaks of pullbacks. I'm going to show you a chart in a moment that emphasizes this. Now, here's the thing. If you're a normal human being, you're probably going to feel the fear of missing out with these stocks because they move up very quickly. You can see the stock, it's at $1, and then an hour later it's at $1.30, and you want to buy those, chase them higher because you feel like you're missing out on a great opportunity. That's okay as long as you manage risk effectively, but what is not okay is to chase a parabolic trend. So let's take a look at a stock that was really hot last week. This is Faraday Future, FFIE, traded huge volume, one of the most actively traded stocks each day last week. And what I want you to notice is first, here is the initial abnormal activity that came on Monday. So it started to trade much more volume than normal. It was boring before then. So Friday of the previous week, it was quite boring. And then it came alive. So we have an indicator that I use on the Stockscores active live service called an action candle. And it looks for statistically significant abnormal price movement with abnormal volume. And I plot that in this program, the screen that you see called TradeStation, and it looks for stocks that are behaving abnormally. So that's how I find these stocks before the crowd finds them. The next thing we want to do is either buy that abnormal break from low volatility, which is step one, or if you buy them later, you have to wait for pullbacks and then breaks of pullbacks. Now, there was a number of them this week. Over here on the left, because the scale has been extended up and down so much, it's a little hard to tell. So let's focus on these pullbacks here. There's a pullback and a break of a pullback. Pullback, break of a pullback. Pullback, break of a pullback. You do not want to chase parabolic trends. So you're probably wondering, what is a parabolic trend? Well, to tell if a trend is parabolic, do the following. Draw a line across the bottoms, and that's your upward trend line. Okay, and so anytime you can draw a line across the bottoms and define the upward trend. If price is up far above the trend line, like we see where I'm circling here, then you want to wait for the stock to pull back. The people buying up here are either short sellers that got caught and are getting crushed on their shorts, or they're emotional traders who are chasing the stock higher without ever really looking at a chart to figure out if it's a good time to buy. So you do not want to be a buyer of parabolic shaped trends. Anytime the trend curves up and away from the trend line, do not chase them. Instead, wait for these strong stocks to go on sale. Wait for them to pull back to the trend line and then break the pullback. So like here, or here, or here. When they're way up here, far above the trend line, you do not want to touch them because they are going to correct. And you can see that on FFIE, that's exactly what happened. All right, let's get into this week's market analysis. I'm going to punch up the S&P 500 here. We'll take a look at that first. Let's look at the 1 month chart. You can see that the trend has changed in the last couple of weeks. We had been in a downward trend, and we broke that downward trend and are now in a situation where the bottoms are rising, which means the buyers are back in control in the short term for the S&P 500, the large cap US stocks. And if we look at the 3-year weekly chart, you can see that we also broke this little pullback in this long-term upward trend. And in doing so, we have essentially defined the upward trend line. So I can draw a line across these bottoms, and that's now my upward trend line. That's quite steep, which means I would say the market is risky, but it is still in a bull trend, and therefore we should remain favoring the buy side until that trend line gets broken. Let's take a look at the NASDAQ. QQQ is the symbol there. And you can see on the daily time frame here, we've been moving up since the pullback in April. May has been a strong month so far. And what's good about the NASDAQ this week is it broke out to new all-time highs. Now it does so from some volatility, which may lead to a little pullback. And so I don't want to chase the market as it goes up. I want to wait for the pullback and then buy the break of the pullback. Let's take a look at the small cap market, IWM. And it too has been moving up, but unlike the large cap indexes, it's not able to move to new highs. So the small cap sector is still lagging. And that's mostly because interest rates are still elevated. We haven't seen that cycle of lowering rates from the US Fed. And that's really what the market's waiting on. Now I'll give you some thoughts on whether the Fed is going to raise rates soon, what the bond market thinks will happen. I'll show you that in just a few charts. But for now, IWM is relatively strong, but it's not as strong as the large cap stocks. And again, I think interest rates, the culprit. Now on the TSX 60, you can see we're in a bull market. That's the daily chart of the TSX, being helped in large part by mining, which has done well. Precious metals very strong, and it's helping lift the TSX to new all-time highs as well. So that's a good looking market. Let's move along to some of those commodities. We'll look at gold first, and you can see that here is the cycle. So you move up, you pull back. You want to buy the break of the pullback. You move up, don't buy up here. Wait for the pullback and then the break of the pullback. Now, waiting for the next leg up, which is sort of halfway in, then wait for the pullback, buy the break of the pullback. So you don't want to be chasing here. You want to be buying good sectors or good stocks on sale when they break pullbacks. Or you buy the break from low volatility. That stuff I was talking about at the top of the video. Here's low volatility, which is a fancy way to say sideways trading. So sideways, not a lot of price moving up and down. And then there's the abnormal break, abnormal volume, and that's what led to the move up. All right, let's continue along and look at oil. USO is the symbol. Oh, didn't type that in right. USO. And oil has been in a general downward trend for the past 6 weeks or so. Let's just take a look at the 1 month chart. What we want to see for oil in order for it to reverse this downward trend is break this downward trend line from a rising bottom. So it hasn't built a rising bottom yet. It's just coming off of a low, which means it's probably going to get stuck there and then pull back. If it then makes a rising bottom and starts to move through the trend line, we can get a little more optimistic, but for now I want you to be fairly cautious. Now, the long-term chart isn't bad. It's got this optimistic pattern building. This is a long-term ascending triangle, and so we may just spake a little time going like this. Economy starts to get better and perhaps breaking out in some months down the road. But for now, oil does not look all that fantastic. Now, we want to take a look at currencies. UUP is the symbol for the US dollar. And you can see that the US dollar has actually had a little bit of weakness, and that's telegraphing perhaps this expectation that the US Fed is going to start to drop interest rates. We're going to look at the bond market in just a minute, but the US Fed lowering interest rates is bad for the US dollar, and it's getting more likely because we've had some inflation numbers this past week that were a little weaker than expected, and that's good for the outlook for interest rates, and that's good for the stock market, which is helping the stock market move higher. All right, Bitcoin. Many of you like to trade the crypto market, and Bitcoin managed to break this pullback right here. That was on Wednesday, and it had made a little rising bottom. So that points to Bitcoin likely moving higher. It may get stuck at the all-time highs. That's usually what happens. If we look at the 3-year weekly chart, you can see that we had this parabolic move to the upside. My concern is that we really haven't made it all the way back to the trend line. I suppose we were kind of close there, so maybe that's enough. I think Bitcoin's probably going to get to resistance, 65 on the GBTC, pull back, and just build a little bit of a foundation there. It's had a great move to the upside. I think the buyers are still digesting those gains. All right, last chart, TLT, which is the bond market. And you can see that the bond market through the month of May has been moving up. That has been supportive for stocks, and it's getting to the point where it's now nearing that downward trend line. Now, problem, it's coming off of lows, not off of a rising bottom. So we need to see a little pullback, which started on Friday, build of a rising bottom, and then a break of that downward trend line. If that happens, then the bond market is essentially telling you that it expects the US Federal Reserve is going to start to lower interest rates soon. And of course, there's meetings coming up where they make a decision on interest rates, but you don't have to wait for the meeting because the bond market is actually pretty good at predicting what the Fed will do. And you just watch a chart like this. Now, this chart going up means interest rates are going down. If you want a chart that better represents what interest rates are doing, just flip it around. Use TBT, which is the inverse of the bond market. And if this is going down like that, it means the bond market pricing in lower interest rates. And so here, that Christmas rally, Santa Claus rally that we had was because interest rates in terms of the bond market were dropping. But since then, we've been generally moving up, and now in the short term, starting to move down again. So it's really an interesting chart to watch. All right, so my ratings then, bullish on both time frames for US large cap and NASDAQ. Small cap, I'm still long-term neutral. It's still under that resistance level. Bullish on both time frames for Canadian stocks, for gold. Oil, not so strong. Short-term bearish, long-term neutral. The US dollar, bearish in the short term and neutral in the long term. And then Bitcoin and bonds, neutral in both time frames. But that's an upgrade for the bond market because it is starting to get a little better. All right, now let's take a look at the trade of the week. This is an example of a stock that we traded in the Stockscores Active Live service. And we are going to start with CRKN, which was a monster mover. One of the biggest movers I've seen in percentage terms and also reward for risk terms in a long time. It was really a fantastic trader this week, well, on Thursday. And it started with showing abnormal activity Thursday morning. It gapped up. I don't like buying gaps. I like to let them build a little foundation, which it did. And then it made my action candle indicator right there on the 1-minute chart, which is our buy point. And that was at about 8 cents, and it moved very quickly. Now, I'm going to show you the rest of the move. The scale gets so skewed because the stock made such a huge move. It made a reward for risk by the end of the day of, I believe, 54. So 54 times risk by the end of the day, which is quite outstanding, of course. Realistically, you're not going to hold it through that whole run because it would run away from the trend line, sell it, and then buy it back, runs away, sell it. Maybe this pullback, that's not a great pullback, but another opportunity to buy the pullback and then the break of the pullback for that last run to the upside. Well, that has been the weekly Stockscores Market Minutes. Make sure you're subscribed. I do these videos every week and you'll get my insight on the markets, on trading tactics, that sort of thing. Hope you've enjoyed the video. If so, click on the like button, leave a comment, and most importantly, trade well.